Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex Gold and S&P fundamental and technical analysis for the week ahead, starting the 26th of October 2025. Hope you're all doing well. Had a great trading week and getting into this week's week ahead. So, looking at the next week from Trading Economics, and they say that next week will host major monetary policy decisions. The Federal Reserve's FOMC heading into meeting without its usual data due to the US government shutdown. Rate decisions are also awaited by the European Central Bank and the Bank of Japan and the Bank of Canada. Attention will also be on the meeting between US and Chinese presidents Trump and Xi Jinping. Elsewhere, GDP figures are due from the Eurozone members, while monthly figures are due from Canada. Also, China will release its PMI data. Additionally, an inflation print is due from Australia and the Eurozone. So, lots going on from an inflation perspective as well as rate decision perspective, which mostly has been priced in. And so, I would say really it's more about what the central banks say at their meeting when they announce what they're going to do or what they've done with interest rates. So, getting into the risk sentiment side of things before we get into the fundamental side. And it's important to understand risk sentiment because risk sentiment is kind of dictates where money flows into and out of and what the market is really kind of focused on. So in a risk off environment where money is looking for safe havens, in terms of Forex, the market is more focused on being on safe haven plays and protecting their money rather than trying to look for a return, and the fundamental side of things, which is more interest rate differentials, right? And so what we see here in the top left hand side is the VIX, and the VIX is a volatility index, but also an indication of risk sentiment. And 20 is seen as a line in the sand, and we can see that actually since over the last few weeks when we've had a little bit of a potential banking scare, I think with some loans that was going on. Also, as well, there was Trump was saying that he wasn't going to meet with China. We had this kind of risk off flows, and really you saw that come into the S&P as well, kind of fall away. But pretty much now we've had volatility kind of move to the downside. That means that risk sentiment is moving to the downside, but also that's kind of confirmed with the S&P. In a risk on environment, you'll have basically investors looking for yield, right? And they typically put their money into higher yielding assets, and that would be the S&P. So you can see prices have moved up, gold has moved down. I do think that this is again more of a function of dollar strength over the last maybe week or two, not necessarily dollar strength based on anything fundamental, but just the fact that the dollar's kind of rallied a little bit while the market was waiting for data. But I think this area between the 1415 area and say 14 1000 sorry 4115 to $4,000 an ounce area is an area that is likely to be bought up by institutions before we probably likely head a little bit higher. But of course, who knows? But that's just my thought, and we'll get into gold a bit later. And treasury yields also a measure of interest rate expectations. And again, although we've headed up a little bit, I think overall, once we get into the dollar, you understand why this should move to the downside, which would basically mean that the bond market assume that the Fed are likely to continue cutting rates and the dollar should get weaker. Also, as well, to kind of back that up, looking at the front pages of Bloomberg, it says here, Besant says US and China have reached a trade framework live update. So, there's some risk on sentiment coming into the market. Reuters also kind of go with the not necessarily the headline, but it is on the main page. It says here, US-China talks nearing agreement for Trump Xi to review US trade envoy says. China negotiator vice premier arrive for second day of US-China trade talks. And you also have a positive framework agreed for Trump Xi summit from Financial Times, says Besant. So they're all kind of going with the same front page stories, and so I would probably expect really risk to be more on than off. So again, we can kind of look for more yield plays and yield divergence plays when it comes to looking at the Forex pairs. So looking at the US dollar, and this is the US dollar index, equally weighted against the euro, the pound, the yen, the CAD, the Australian dollar, the New Zealand dollar, and the Swiss franc. And we can see that dollar over the past, few weeks or so has been moving to the upside, but I think it's probably likely to be the limit of the move. I mean, of course, prices could move higher, but I'm looking for short trades as as I think prices should move to the downside unless there is some hawkishness around the US dollar. But we got on Friday the CPI data, and it says here that inflation slows, supporting Fed rate cut. Core CPI rose just 0.2% month on month, softest in 3 months, and the dollar fell. Although it kind of bounced back towards the end of the week, end of the day, Treasury yields declined and stocks rose as the data strengthens the case for Fed easing. Markets are now increasingly confident of two Fed cuts, one next week and the other in December. If the shutdown continues to delay economic data, this CPI report becomes even more influential, reinforcing the dovish Fed path into 2026. So, really, there's no positives, I think, around, and I say positives, but there's no reason to really kind of buy the dollar. When it comes to understanding why you should buy and sell a currency, you're looking for really just reasons why, right? You're looking for evidence as to why you would want to be a buyer of the dollar versus, selling the dollar. And selling the dollar is a lot more compelling at the moment. So for me, looking for more sells on pullbacks, I think right now is still a decent area to look for short trades on the dollar. And the higher it goes, is the more I'm looking for short trades. So I think this week we are likely to, I think the market might be waiting just for the statement to come out from Fed Chair Powell to see what he says about future guidance before the dollar either moves to the downside or potentially moves to the upside if he's a bit less dovish and maybe a bit more hawkish. But ultimately, I do think that of course, like all central banks, they are data dependent. They're not necessarily on the predetermined path at the moment. But overall, my bias is still to look for shorts on the dollar. The euro, there was an opportunity to buy the euro this week as it pulled back into this area of demand, which also had an area of resistance. Resistance turned a bit of support. I marked that out last week, and this was an area to look for a potential long if you're looking for longs on the euro. I think that the euro should continue to remain more of a buy than a sell. It says here the ECB policy outlook and the ECB seen holding at 2% through 2027. A Bloomberg survey of economists forecasts that the ECB will keep rates unchanged at 2% until at least 2027. About one third of respondents see at least one more rate cut, while 17% expect rate hikes before the end of 2026, with the ECB seen on hold while the Fed and the Bank of England cut. Well, I'm not too sure about the Bank of England cutting, to be fair, and I'll get into that a little bit later. But relative rate differentials should support the euro, and that's really what it's all about, right? It's relative rate differentials is what you're looking for. If the Federal Reserve are looking to cut rates, cutting rates is the central bank's way of trying to devalue their currency, whereas another current central bank is looking to hold rates, so they're happy or satisfied with where the value of their currency is at the moment and inflation. Then you want to sell the currency that is looking to cut rates and buy the one that's looking to hold rates, relative to each other, right? So that's what it's all about. So it says, however, any softening in inflation projections, especially for 2028, could open the door for further downside. So markets are pricing in an extended pause by the ECB, but if inflation fails to re-anchor near 2% or fiscal risks escalate, policy may still ease in 2026. So again, it's still data dependent. In the meantime, euro could benefit from relative central bank divergence, especially if the Fed and the Bank of England lean more dovish. And so we know that with the Fed pretty much the market is pricing that in. So the euro really should be a bit more of a buy. Now, I'm not saying that prices are going to go straight up this week. They could pull back, but ultimately, pullbacks, I think, whether it moves up from here or whether it moves, up eventually over the next week or two. I think at the moment, the way that things are, and as long as the data does support buying, I think the euro should remain a buy. The yen is a little bit more complicated. Because there's a lot more going on in terms of the political risks, which is having an effect, and I guess the new government, and that's having an effect on the Bank of Japan's, I guess, not decision to necessarily hike, but when they hike. And so what we have here is Japan's inflation rises again this week. So that was supportive of a rate hike. So it says BOJ hike likely in December now. Core inflation accelerates to 2.9% year on year in September. Japan CPI, excluding fresh food, rose from 2.7% in August to 2.9% in September, matching forecasts. This marks the first acceleration in 4 months, driven largely by higher energy costs due to smaller subsidies and lingering heat-related consumption. Despite sticky inflation, the Bank of Japan is expected to hold next week, the 30th of October, with 90% of economists expecting no change. December remains the most likely time for a hike, though some economists warn political dynamics under Prime Minister Takayachi may slow the path. So at the moment, Prime Minister Takayachi is seen as wanting to kind of do the opposite. Her policies are more negative for the yen, meaning that she wants a bit more weakness on the yen, or her policies will likely weaken the yen. Whereas the Bank of Japan actually want to strengthen the yen because they want to counter inflation. So there are countering forces, but I do think that the yen can have its moment in the sun at some point, and maybe this week, depending on, of course, what happens with the Bank of Japan announcement and whether they come out as being a bit more hawkish. Technically, this is really nice for a buyer, but like most, or if not, all of Forex over the medium to long term, and sometimes in the short term, price is going to be driven by what central banks do with policy or risk sentiment. So it's setting up nicely for a buy, but you will need the Bank of Japan to really kind of come through on the trade if you are looking to buy the yen, which I am going to be a buyer of the yen, start to be a buyer, but at really kind of smaller positions. So I'm positioning myself to be a bit long, and again, that will change depending on whether the Bank of Japan remain or turn kind of a bit more hawkish. If they stay dovish, then of course I will just not get into any trades, or I will get out of a trade if I'm in one on the yen, and just wait for more of a hawkish Bank of Japan. But if you are looking for a buy, this definitely supports any yen buying on any pairs. So technically, you're at a cheap level here. It was cheap here, prices pulled back, and it should be potentially cheap if the Bank of Japan do come out as being a bit more hawkish and the market starts to price in some rate hikes. Now, the British pound did weaken on an inflation miss. It says here UK headline CPI for September came in at 3.8%, below the Bank of England's 4% forecast. Services and food inflation also undershot, a key development since the Bank of England had flagged food inflation as a risk to persistent price pressures, and the pound dollar dropped to 1.3385 to 1.3311, then partially rebounded. Market repricing, Bank of England cuts. Some markets are now pricing in 18 basis points of easing for December, up from 11 basis points earlier in the week. So expectations for a December rate cut are increasing, and a November cut cannot be ruled out, particularly if Ramsden joins doves like Dingra and Taylor on track for a December rate cut, with a rising probability of a November move if more MPC, Monetary Policy Committee members shift. Dovish, an early cut could be justified. Inflation and wage data, along with the autumn statement, are now critical for timing, and so I still believe that the British pound is a sell as we head into the government budget which doesn't look great at the moment. But also, there was some supportive data that came out on Friday. I think that was to do with retail sales and PMIs. So the economy is seen as doing okay, but I think the overarching narrative is still what the budget is going to be like and how it's going to affect the economy, because regardless of what goes on today or what's happened in the past, it's really about future budgetary policies, which will then affect likely to affect inflation, which will then affect the Bank of England's policies, right? And so at the moment, I think the British pound, with the uncertainty still remaining in the market around the budget in November, I think the British pound should continue to be a sell on pullbacks. So just looking for really a pullback if you can get one. Last week, this was where I looked for short trades on that pound CAD, and that trade worked out quite nicely. And so, again, we'll get into that a bit later in the trade updates. But any pullbacks in the next week or two, if you can get any, as we head towards the November budget, towards the end of November, I think it's the 25th of November, that should be really nice for a sell trade. Now, again, the budget could work out to be positive for the pound, but ultimately right now, from what I'm reading, it does look like the budget is seen at the moment, it's seen as a bit of a negative story. So let's see what happens with that. And if you guys do want to join Trading 180, the Discord private members area, I am opening up enrollment probably for the last time this year on the 3rd of November, and it'd be for maybe a few days. It might be until maybe the 6th or the 7th of November, and then that's going to be it probably for the year. So if you really want to get some learn some high level fundamentals and really kind of follow along and get mentored by me and some really, really good traders in the group, then you have the opportunity to do so. Enrollment starts on the 3rd of November. So looking at the recapping, really, when you're looking at the dollar, for me, it's more of a sell. The euro should be more of a buy. The yen, I can understand that definitely being a bit of a buy, but a smaller position when it comes to being a buy, and the pound to be a sell. So on pullbacks, right? So when you're now looking at pairs, it makes sense to then you can understand the direction of travel, right? So prices did pull back into this area here. And again, we did get some supportive evidence for why you should want to be a buyer of the euro dollar. Now, prices did move up to the upside slightly. I know there were some traders in the group that did take this trade entry that we normally take on the Wednesday or the Thursday, positioning a bit early, and managed to make some money on that. But we could see either some upside, of course, who knows, but if we do see some downside, and then we get either we can either look for a buy here or maybe a buy, which would be maybe a bit more of a stop hunt, then I think that should be nice if you are not in the trade. If you are in the trade, and of course you're just hoping that prices continue to move all the way to the upside, hundreds of pips, so you can kind of get that nice risk reward trade as easy as possible. But if you're looking for a new entry, I think the path of these resistance should continue to be an upside, whether it goes straight up or whether it pulls back to the upside. Looking at the intraday, matter of fact, looking at, I think these monthly lows should definitely be where you're looking for if you're not in this trade already. So anything probably below the 115.78 level, 77 level, and then look for buys here, right? Or looking for buys in and around, if you know how to trade, stop hunts around here. So that's really the direction of travel that I would take. But if you are looking to sell the dollar and buy the dollar and sell the euro, of course, then you can look for some trades around this supply zone, and then just map out where you feel areas of support and resistance are, and then look for areas of to trade around there. But for me, I'm looking for more buys. That's where the fundamentals are pointing me at the moment. Looking at the dollar yen. Now, I do think that this is likely to be a bit of a sell, I would say. And to the guys in the group, I was saying that probably any time from now would be a decent sell, although I would probably put my stop loss somewhere around the 153.80s, 153.70s, somewhere around here, I think. if I was looking to get short, which I am, I'm just waiting for an entry, but it's going to be a smaller short in anticipation of a dovish Fed and maybe a bit more of a hawkish Bank of Japan, right? If we get that, then prices should want to drop from here. But I'm not in the trade yet, just waiting for maybe a bit more of an entry. If you are looking for a long on the dollar yen, then a move down into this demand zone should be where you're looking for. And then if you want a bit more detail, then you're looking for some areas of support and resistance within this zone here. So you're probably looking at that area there. You got support there, bit of support, so resistance there, support there, and then you've got an area there as well, and you've got probably there, and then the lower end of the zones, right? So that's what I'd be looking for if I was looking for buys. If you're looking for sells, pretty much you're at these highs already. So I think anywhere around here would be nice. And if you even get a signature stop hunt trade set up, then that's going to be nice for a sell trade. Looking at the pound dollar, again, not a pair I'm interested in trading at all, although last week there was a nice sell here, but you'd have to have believed that the pound was the weaker out of the two, which obviously turned out to be correct. But we're coming down technically to a nice area, but again, fundamentally, I'm not a fan of this pair at all. But nice trade setup down at these lows. If you are looking for long trades, if you're looking for short trades, you've got to wait for prices to move all the way back up to here before looking at going short. Intraday wise, I think you have to kind of look for these highs and areas around these highs and maybe areas around these lows, but nothing really of interest technically. Euro pound, I am still in this trade, and I've got about 20% on one of my positions left, and prices are making higher highs. I guess I'll talk about that trade a little bit later. But if you are looking for the for a trade, you have to really wait for a pullback into that demand zone, that daily demand zone, before going long there. So that's really where we are. Fundamentally, again, the euro is holding rates. The pound, although they're looking to hold rates, I think, again, the uncertainty around any pound, the budget and stuff like that, should continue to push the pound lower. So any pullbacks should be decent buying opportunities for the euro pound. Euro yen, as the euro is one of the stronger pairs or stronger currencies, I don't think really if you're buying the yen, it should be against the euro. There's definitely weaker currencies out there. But technically, this is very nice. Of course, but I always want to look for buys at lows and sells at highs. So this is a high I'm looking for. I would look for a sell, but of course that would have to be in conjunction with why this is likely to be expensive fundamentally, right? Or expensive from a exchange rate. So, but I'm not really looking at this pair as a tradable pair for me fundamentally, because the direction is really just not that clear. So, but technically you can look for sells around these highs. And the pound yen, I'm interested in looking at this from a sell perspective, but at the moment both the pound and the yen are seen as a bit weak. So if I'm looking to trade the pound yen, then first of all, I would need the pound to be actually on the expensive side. So I'd need the pound to already be around here. And then I'd need the yen to be on the cheap side, right? Which it is. But we've got, the pound is at lows. The yen is also at lows. So unfortunately, when it comes to trading this pair, I just can't get into it. I'd have to see the pound as being on the expensive side, because then if the pound is on the expensive side, then if you go back to the pound index, it would be like shorting from here, which is what you want to do if you feel the pound should go lower. And it would be like buying the yen down here, which is if you believe the yen should go higher. One of my rules that I don't do is I don't sell at lows and buy at highs. I mean, some people do, but I don't. And so I can't sell the pound at this low as it's already low, which means that this trade, although it does look nice in a supply zone, I can't take it because the pound doesn't fit the profile of as to why and reasons as to why I want to get short here. But if you want to ignore all that and still just get into the trade, then of course I think this is a really nice area to look for a sell trade in anticipation of a weaker pound and a stronger yen. And if you are looking for a buy on this currency pair, then I think down at these lows should be decent. The 201.50s, 201 round number should be decent for a nice buy for the pound. But again, I'm not really a buyer of the pound at all. I'm a seller of the pound, buyer of the yen. Looking at the metals, so looking at gold, and gold did touch this demand zone. I think this is a decent pullback. It's pulled back as a percentage around nearly 10%, about 9% there. So that's a decent pullback. So looking for any kind of intraday moves. We've seen that definitely there's been buying here. Now, if you haven't got into this, then I would say the next best trade, or what I would look for, is more of a stop hunt play. So that's where you've got a level that's been touched, or clear low and a clear high, or a level that's been touched several times, and then something like that occur. If that comes down into a fresh area of demand as well, you can just look for a buy here. But if you wanted more confirmation, then you would look for a stop hunt somewhere around here before going long. And again, that is dependent upon the dollar being on the expensive side, and of course gold being on the cheap side. Same thing with silver. We've pulled back quite nicely, and I think silver is a really nice buy. And so let's see what happens here. Same exact, but same similar setup, where you've got an area now where prices could look to stop hunt around here, or just head into a cheaper area, another demand zone. And if it does, I think that's going to be a really nice buy to the upside, especially if the Fed come out as being quite dovish, or at least the market expects the Fed to look for more cuts. And then we've got the S&P. So the S&P, due to the CPI data coming in lower than forecast, prices went to the upside. Stock markets typically do end up rising in a interest rate cutting cycle, and so that confirmation pushed prices to the upside. If you are looking for a buy trade, I would say probably wait for a deeper pullback before looking at going long. Looking at any kind of intraday levels, I would say somewhere around, or you can definitely say there, and probably around here as well, would be where the levels are to look for a long trade. I do think the 66.60 area is probably still a bit too expensive for my liking. If I was looking for a trade, the minimum I would probably look for is at least a move down into this the lower end of this auction, where you've got that being a high, or actually that's the new high now, but that's really the low, right? So that's going to be the monthly low, this is going to be the monthly high. And so I would like to trade somewhere around here, the bottom of this area, if we can get down here. So that's what I'm looking for when it comes to the S&P. So looking at trade updates and the pound CAD, zooming out a bit. So last week I was talking to you guys about the stop hunt, so you can check out last week's video and trade analysis, and I was saying where my entry was around here, and it pretty much worked out as I hoped. The only frustrating thing about this trade was I was waiting for a pullback into that 50% area to try and get a short trade there, and came in. If you zoom into like the hourly, you can see how close I was to that order being filled, which would have given me a much better risk reward. So that would have given me a risk reward of around there. I would have been on two positions. I would have then got a 1-to-1 on that position, and then I would now be just holding one position, right? So one win, and then I'd be holding this for a full position. But because I only got in on one position, once that hit a 1-to-1 right there, I ended up taking off 80% of the trade. So I've only got 20% on that trade now. So that's basically a winning trade. And then when the Monday's open Comes Sunday night's open, what I'm going to do is I'm going to trail my stop all the way down to here, lock in, the rest of those profits, and then see if we can kind of swing trade down to these lows here, and see if the CAD can be a stronger buy. There's reasons for that, but the pound also sell off a little bit more. So that's really where the trade is. So a profitable trade there, and the euro pound doing decent as well for me. Again, I've been opening this trade for a couple of weeks, and we're moving a lot higher. If you go back through the previous couple of weeks' analysis videos, you'll see exactly why I got involved in here. Nearly got stopped out on a trailing stop. Now, this is making higher highs. I'm going to be moving my stop up to probably nearly break even, somewhere around here, around that swing there. So I'll be closer to break even on the remaining 20% open position that I have, but prices are moving to the upside, and I'm hoping that obviously they break out a lot higher, right? So this level's been touched several times, like once, twice. Well, this is really the first touch, second touch, third touch, and then the more times the level is touched, hopefully the weaker it becomes. But there are definitely fundamental reasons as to why the euro should strengthen over the pound, and so I'm hoping that the position that I do have open should move to the upside. So two profitable positions that I am in at the moment. And so, yeah, but no new trades. Last week I was tempted to take something on Friday, but I thought I would wait until this week to kind of confirm, and not really necessarily need to hold over the weekend or anything like that. Reduce my risk just in case anything does happen, from a risk perspective, like risk on and risk off. So on Monday, Tuesday, I'll then start looking for some entries if they present, and I will talk about my entries and trades in next week's video. So hopefully you found the analysis useful, and don't forget that if you do want to enroll in the Trading 180 mentoring group Discord, where I go over fundamentals, technicals, I'm definitely more fundamentally focused, and a lot more in depth than what I kind of talk about on the YouTube videos. Enrollment starts on the 3rd of November, and that will be probably your last chance this year to get involved in the mentoring group. Anyways, guys, have a great week and take care, and I'll see you all next week.